Back with you. Let's take a look at our grain trade, shall we? I'm Marlon Bowling, your tour guide to the ag commodities. Here we go with a look at our corn board. Is it more exciting than what we had a half hour ago? Well, the answer is no. September corn still only 1 1/4 higher at 6.12 1/4, and now December has gone down by 1/4 cent, 1 tick lower at 6.10. It is still basically dead in the water here. Now, on our quotes from bar chart, you have September soybeans still higher, but they're only 12 3/4 higher now. We're at 14.67, and that's an even dime off our overnight high. November now 7.5 higher. We're at 13.88.5, at least at the moment. Now, when you get to the wheat trade, this has really been struggling today. Look at Chicago September. 7.67 is only a penny from its low of the day, and that is down 19 cents from our close yesterday. Likewise, we're having a difficult time in Kansas City wheat. September dropping 23 3/4 cents at 8.48. Wow, that's only 2 ticks from our low of the day there so far. In the Minneapolis market, you have September down 15 cents at 8.87 3/4. Again, just a penny and a quarter from its low of the day. Meanwhile, in the cotton market, it has been surging ahead for days, the way it seems, and today they're going backwards. We have December down 349 points, at least at the moment, and we're now at 113.37 per pound, over 500 points off of our overnight high there. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com. He's based in Chicago. And Todd, you and I were talking during the break here just a moment ago that there is a Newswire story out, and I think we'll have more details on that coming up, but there was a story that Russia had once again bombed a couple of port cities in Ukraine. One was Odessa, that started this whole thing about trying to get grain shipped out of there. And yet I see where the wheat market is actually lower on the day. It doesn't seem to make sense. You would think that that would cause the wheat to go up. What is going on? Why is the trade ignoring that?
Well, because first of all, this is the third time they've tried to talk, thinking about getting things out, and they haven't been able to get them out. And I think that the markets are already anticipating that they're not coming out, and you're still having a market that has extremely light volume, that is not really basically interested in trading right now, and which is leaving pretty much full control to the funds, and the funds are trying to push lower, in my opinion, to try to squeeze and have some forced liquidation. So I think we're going to continue to see these grains rotate and try to go from support to resistance, with the intention of trying to get them to break a little bit, so that it'll force the banks to come in and say, "Hey, we got to liquidate you out." I mean, the volume today is pathetic. Okay, it's been low each and every day for the last 6 days. We've gotten a much lower volume. So right now, there's a lack of interest in the entire market.
When you look at the corn trade right now, are you focusing mainly on that December contract now for all your pricing? Or are we just looking past September now?
Yeah, we're looking into December now, and that's obviously that's next up on the major board. So yeah, that'll be next up. But again, Marlon, I think we're seeing a typical movement where we forget about that there's going to be a food shortage. We forget that we don't have enough. We forget that the weather's lousy, and that we've already seen some misquotes, and we've got a short supply to begin with, and that there's already food riots in the Middle East. So we're forgetting about all that as very often we live in the very short term.
A quick look here at the Dow Jones Industrial Average, and right now September futures have flipped and gone lower by 170 points. So that could be key here. We're now at 33,942, so they have gone below 34,000 now. And the U.S. dollar index is 200 points higher.
They're also in the same, in the entire market structure, from commodities to equities to bonds, are all in the same vein of nothing going on. Nobody's involved. It's a very quiet trade, and 170 points in a $34,000 index is virtually nothing.
Good point. And by the same token, West Texas crude has bounced now up $1.52 at 88.05. We'll take a break here, and we'll come back and we'll look at our livestock trade with Todd Bubba Horwitz right after this. All right, we're talking with Todd Bubba Horwitz of BubbaTrading.com, and we looked at the grain markets. We looked at some of the outside markets. Now let's focus on our livestock trade. We'll go to live cattle futures. and see what they're doing. We are firming up just a little bit. October is now 25 cents higher at 145.92. December likewise up 25 cents on the day. In the feeder cattle market here so far today, we are now higher. September now up 80 cents at 186.27. They finally figured out which way they wanted to go. They were trading mixed for the first hour of trade. Now you have November and January over $1 higher on those deferred contracts on the feeders. On the lean hog trade, we are still mixed, and now you have October up 27, December down 35 at 87.35. So Todd, what's going on here? Cattle market now starting to establish a bit of a base here the way it looks today, and maybe it can firm up again. Why?
Well, I think they've been pretty firm, Marlon. I think that cattle's been, fairly strong. I don't think there's a ton of room to the upside, but I think the feeders are telling you that corn prices are going to be higher in the future because obviously the deferreds are running up. But again, I don't see a dramatic upside move here, and I don't think they're going lower. Again, I'm going to be clear. I don't think we're going to fall apart. I just don't see much more room to go to the upside unless crude oil gets creamed. Okay, I don't see that coming. I think that crude oil is going to turn around as well, which might put some pressure on these markets. However, again, you just have to remember that we're at pretty good pricing right here, right now. And these are near highs. I mean, obviously we go back to the all-time highs, which is another 25% or 30% higher. But overall, I think we're in pretty good shape. I think they look great. I think they're going to hold here. I just don't think they're going to dramatically move to the upside. They're probably going to grind, and I could see feeders getting up to 190 or so, and I could see fats getting up to 145 or 150. But I don't think there's much more room past there.
All righty. Well, Todd, good to talk with you again. Thank you for all the information, and we'll talk again real soon. Todd Bubba Horowitz of BubbaTrading.com. He is based in Chicago. Now, I want to take a look at the wholesale pork trade with the numbers provided by Chris Summers with USDA's Market News Service office. He's based in Des Moines, Iowa. He said the average on the cutout values in the pork cutouts last week, they went down from 126.81 the week before to 123.34. That was a change of $3.47 to the downside. Loins were up to 107.74 last week. The Boston butt market, 126.40. was down almost $10, a little over $10 from the week before. The ham market at 113.30 was down over $4 from the week before. The belly market at 211.91 would be down roughly about $8.50 or so from the previous week. Just wanted to pass that important information along from Chris Summers of USDA's Market News Service office, and we thank him for that. Suzanne, I'll turn it back to you.